What's up, bros? How you guys all doing? All here, Bulls on Wall Street. My friends, my people, we got a lot to unpack in last week's action. So first of all, the market had the big kind of crashy gap down on Monday, and we had the layup long for a couple days, and then the market did what it did, which was we had a kind of a short trap day, and then we started to grind back. And so now we're in a very, very, I think, precarious spot in the markets. And so that's what I want to talk to you guys about today is that, we have a lot of positive things going, and then we have a couple like red flags going. And I think that's going to be important as we come into the week. So first, let's take a look at the indexes, then we'll get into the general watch list as we're going. So first of all, in a classical term, this would be kind of a bear flag, right? So you'd have like a breakdown, and then see how you got like a low volume pullback up here, right? So you got a low volume pullback up here, and you're into the 9 EMA. So like in your classical terms, this is a bear flag. But this is also what we'd call like often a trap bear flag. When you get the big flush out, right? When you get the big flush out, the capitulation trade, and that's what it was. Remember that the VIX, right, got all the way up into what, 60 almost? And so when the VIX gets up all the way into this, right, that's usually your blowout. And so now what we're having is like this bear flag that kind of turns into potentially one of those like grind the shorts type of scenarios. But it also makes it really difficult to long because all the stocks will be hitting resistance. And so what you'll have is the stocks will be hitting resistance. You'll get these like mini spikes down. They'll suck in the shorts and then they grind it back. And that's from just anecdotally from what I've seen in the past into these type of things. Remember, I've been doing this since 2008. I've seen this scenario numerous times. That's, my best educated, look at this from what I've seen in the past. Because if we just had like a 1% gap down on Monday and tested the 200-day moving average, my guess is we'd probably roll over a little bit and do a double bottom or something like that. But because we had the kind of capitulation flush out from the yen carry trade news, now we're into this grindy scenario. And I think it's going to be next week, specifically Monday and Tuesday are going to be difficult because we're going to get some, I think we're going to get some decent spikes down. But most likely it's going to be like these kind of grindy spikes down where it's like you get one or two big candles down and then they grind it back, and then out of nowhere, right when you think it's going to be hot intraday, but everything looks extended, they'll kind of get a spike down, and then, you'll have this kind of thing going intraday quite a bit. And so you're going to have to be careful coming into the week. So the game plan, I think, for this coming week is to stay away from the long side on any of the big cap news that just follow the QQQs and are approaching into resistance, right? And so, like, for example, if you have Microsoft here, right? You had this big pullback. It pulled back 100 points. So, like, the odds of it, like, kind of re-crashing down into here are so small, right? But I wouldn't be surprised to see, like, ramp and then, right, like a grindy kind of McGee here. And so it makes it really tricky. If you get short, it's got to be the picture perfect entry. You cannot chase it low. So what happens is when you get the grindy bear flag, if you try to chase a short low intraday, it'll just pop back. What you have to do is kind of short into pops if you see it and you want to short. And so, we may get a little bit of a pull, but then I think we probably break over the 9 EMA and start to kind of grind its way. And so the whole time it's going to look like a bear flag. And so it'll kind of keep sucking in shorts. And so you're going to have to be very, very careful as we go through. There are still quite a few cross currents into the market too that we have to be very much aware of. And what I mean by cross currents is that, we have CPI coming, and most likely the fix is in on the CPI. It has been for a few months. They've got this thing down into what, 3.1 or, 3.2. And most likely it's going to keep coming in just lower and lower and lower as we head into election season and all of this kind of stuff. Even if it doesn't feel like it, that's probably going to be the price action of it. And it may not even matter. So I want you to stay away from these kind of names. Microsoft, I think, which is like running right into resistance. You can see like right? Nvidia's kind of grinding into resistance, and so you got to be really careful trying to long these. Like, see this Amazon? You know, I got the 151. Now you're right into the 200-day moving average, and so look, there's a gap fill here that can be taken, right? That could be traded, and there's a lot of room to it, but you have to be so careful because you're also at the 200-day moving average, the 90 EMA, and you also have, right, this kind of bear flaggy thing. And so I wouldn't be surprised to see this thing kind of spike down maybe one day and then, right, kind of make its way and then kind of do all these kind of fake outs as it kind of grinds its way back, because you also got the capitulation dump on this. Look, it was $222. It got to 152. That's 50 points on 200, right? You got 20% plus pullback. That's what you get on these big caps, right? Like, that's, you don't usually get much more than that. And so we want to be a little bit careful. They all look like bear flags, but they could be trap bear flags. And so I really, you know, I really think for the next handful of days, we want to stay away from these things, right? Especially on the long side. So you can see here, right, like Netflix is in a big channel here. And so you're just kind of back and forth. You're at the top of the channel here. Now, you know, most likely you kind of come back into the channel and come out. But it very well be, because we got the capitulation kind of flush out, that you kind of pull back and then kind of grind it through also. So it's just not, it's not an easy trade. So what is going to be like an easier trade? I think that we're going to have to look at some other type of names, you know, stocks that had earnings out and things of that nature. And so I made a little bit of a list here of stocks that had some earnings beats that could be in play for this coming week. We had docs out. 100 million share float, so pretty low float. 122 million shares, $5 billion company. It's a nice sweet spot here. It was up about 40%, right? So similar to like a UPST type of move without the, you know, awesome range on it. I think this is a classic, you know, red to green potential look. For those of you guys not familiar, you know, let me know. You can get, we have all sorts of free kind of beginner courses on the YouTube channel. But a red to green is just a week open and then a rate of takeout of that highs. SG, so this one had an earnings beat on this too, and so you're right into a sweet spot on this, and you know, let's just pretend this little wick doesn't exist, and you've got yourself a really good entry point, and it's also pretty low float, a mid-cappy type of name. So let's get into this bad boy. ADMA. So ADMA is got a breakout on some news here. You can see here, Biologics reports 107 million versus street estimate 86.4. That's a $20 million beat on revs. You got 14 million shares of volume, some decent volume, and a pretty low float on this also. This is going to be, you know, a big trender kind of company here. It's been beaten nonstop. Let's see if we got a week open on this one. I think we could take a trade on it. Iova, 23 million shares a day in volume. We got a range break setting up here. You know, this is, I think this is the right time, right place to try some of these, especially, you know, in the biotech sector. Cargill's got, right, this is, you know, your kind of classic, right, cup and handle type of play here, and you got a flat top breakout here. You had a nice ORB on this. It's doing a little bit of follow through, a little bit thin on the volume at only a couple million shares, but I think it's still doable to trade on this. TTD, monster move, $11 on earnings. You got a $100 roll and a $102 breakout. Any kind of weakness on this one, tap backs or weak open on this one, I think we're a buyer of this one. If you like these kind of cheapies, I think this app, this used to be $105. It was a multi-billion-dollar company. It got smoked out. They finally had a little bit of an EPS beat here, and dude, you're starting to take out this range here. And what interests me is that you have about 70 million shares in volume here. So it's been a big surprise. You had buyers in this one. Watch any weakness on this one. If it taps back into this kind of 3 to 275, I think you're going to find buyers start to come into this thing. It got rejected on Friday because it ran right into the 50-day moving average. We were playing at this at the open, and then it kind of reversed down. This may also 35 million shares. Watch this 50-day moving average. See how you test it into this thing? You test it in once, you test third time. If in this coming week it breaks and closes over that 50-day moving average, we are going to have ourselves a little bit of a hoot-nanny on this one. We've got all sorts of good things happening. Big volume push on this one. Let's keep an eye on this. Kava, Return of the Dead. It looked dead, and now it's coming back. I'm thinking this has got breakout into the cards. It's been a leader for quite some time. It had a nice 20-25% correction. That's usually all you need to kind of recharge the juices on this thing. It's got a good look to it. It's an IPO stock, and it's really in that sweet spot of market cap, I think, that a lot of you new traders especially should be focused in on. A lot of times with new traders, you're always thinking, I got to trade Meta and things of that nature, NVIDIA. But these are going to be infinitely easier to trade. They're going to have a little bit less volume, but still a lot of liquidity. And you won't have as many algos and HFTs in them, kind of smoking and wicking you around, and like all the options traders and stuff like that. I think these are just infinitely cheaper, a little bit cheaper names, but they're also just easier to trade, right? It's a $80 stock. UPST, you got a level here. It did reverse back and kind of close at it, but I think this is a big spot. And you can see here this breakout goes a little bit of the way here. So I think this is going to be in the cards. It may need to chill for a day or two, but sometimes heat is heat. It's a big reversal with big volume, 50 million shares. This is going to have legs on it. TSM, I got this on watch for a potential short. It was 130 something. Now at 169, that'll be the 9 EMA. It is a rounding and a bottoming pattern. I would be surprised if it doesn't get, break past this at some point. But I think if we need a short, like if the market does one of those kind of big candle drops that I'm talking about, I think that we can short this with this kind of 169, 170 as the resistance point. It's a big supply zone right there. If you look at this thing, right? There's a lot of supply just running around in this area that we can short into if we need it. Same thing with Microsoft and Tesla. They all got the same kind of looks. FTNT, right? Nice flag pattern starting to develop. It may need another couple days of just marinate here, but you had an earnings push, and then you got an inside day. And that's why I think it could be in play even for tomorrow. Usually after an earnings push, if you get a couple inside days, the next day, the day after, you can get yourself a good push on this thing. Amazon's another one that I think if we need a short, right? We were at 150, you're at almost 170. You've got a good retracement going on this. It's a bear flag life. Now it's just for a day. Most likely these things pop down. If we get the short set up on it, it'll pop down. You have a big one candle, and then they reverse back through. It'll do a higher low and come back through. Most likely, that's the playbook on these things. Same thing with Tesla, right? Right at that 200-day moving average. Now, Baba's an interesting one. It finally came out of range, and then you had an inside day on Friday. I think 80.25 does it. Guys, usually after these big pushes, if you get an inside day, they start to take off again. It's got a good look. I think Dash is also, right, starting to kind of coalesce here. It's 9 EMAs catching up here. Don't be surprised to see this thing come into the week. It could need one more day, but it's getting there. Like, you're going to have a spot on this thing. Mara, this is one of those kind of bear flags that could turn into a grindy, but for a day, I think this is going to be it. That 60,000 is going to be like a rock around Bitcoin. There's a lot of supply between 60,000 and 65,000 now, and the supply zones have shifted. So this looks like a bear flag. Don't be surprised to see this thing kind of also get a little whoosh down. CLSK looks a little bit cleaner. If we need another short here, I think anything under 19 on Intel we can take down. And then you can see here, right, CLSK and Marl have the same look on this thing. Both of these are turds too. I mean, these miners are just degen stocks. I mean, I love trading them both ways, but in the end, they're probably both, right, sub $5 type of names. Sedig, right, earnings gap down, and it ended up holding up here, but I think we got a little bit of a bear flag going. A little bit of tricky stock to trade. It does have a spread on it, so you got to be careful. And ENVX, you got a nice bear flag on this bad boy. Good volume, 5-6 million shares. You got a 1050 spot on this one that you can roll through that I think is going to be important here. Now, guys, going into this coming week, we have all sorts of stuff going on here. Top earnings for the week, AMAT, Cisco. Okay, Walmart could be important. You got U.S. Treasury statement. These are probably nothing. Japan PPI may actually be something, right? Because these guys have been raising rates, so that's going to be important. Tuesday, Fed Bostic. Okay, that could be something. Treasury buyback. This will be important too, right? UK, CPI, PPIs. Nothing that crazy, but like I think any of these Japan things are going to be really, really important. And then, of course, jobless claims data has been important. The day last week where we were up 2.2% on the NASDAQ or whatever it was, right? We had that big day. That was on a jobless claim. So we'll have to be just super mindful of all these kind of things. Guys, there's not a crazy amount of, not a crazy amount of news flow coming into the week, but we'll keep an eye on this. I didn't see any really good conferences or anything either, but earnings season is still at full board, so we can keep playing earning stocks. Always make a list of like stocks that are beating on earnings and breaking out. Oftentimes some new leaders may emerge, some big winners may emerge, and you'll have a little bit more wind at your back than kind of trading some right, the mag sevens, which are just really, really tricky to trade. So let me know if you guys need any help with anything. Peace.